Hello, everybody, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and I am joined today by Dan Darrow. Dan is a professional trader with T3 Trading Group, and he's also a moderator in T3 Live's Alpha Team virtual trading floor alongside Scott Redler, who was our last guest 2 weeks ago. Hi, Dan. Thanks so much for joining us today.
Hi, thanks for having me. It's great to be here.
So I want to start with you, let the audience here get to know you a little bit. So tell me, how long have you been a trader overall, and how long have you specifically been with a T3?
Sure. Yeah, so for those that don't know me, I have actually been trading for 17 years. Well, it'll be 17 years in June.
Mhm.
I started in 2006, right after I graduated college. I went to Fordham University in New York. We came this close to making the NCAA tournament, so I want to give a shout out. But I've been trading for 17 years.
Mhm.
And I've been with T3 since 2010.
Mhm.
The group I was previously with got assimilated into T3 during or right after the financial crisis. So I've been with T3 now almost in May, I believe it'll be 13 years.
Okay.
So a while.
So yeah,
Yeah.
experienced trader, been through many trading cycles of the financial crisis, all of it. So this craziness that we're seeing in the market now, you've probably seen something similar to this before and can be a mentor for those who have not. All right, so let's start off with your current week of trading. And I do just want to ask you, so far this week, we're Wednesday, we're halfway through. How would you grade your current week of trading? A, B, C, D? What would you give it and why?
Honestly, it has not been the best week for me.
Okay.
So to be perfectly blunt, I'd say maybe like a C.
Okay.
Um, and I can talk through the reasons behind it.
Yeah.
Which I guess um, one of the things that really stood out to me at the end of last week was just, and I'm sure we're going to get to it in a couple minutes, but just all of like the bank crisis and what unfolded. And for me, it's coming into this week, had a bit more short on the brain, kind of stuck to that.
Mhm.
So for me, like seeing like a lot of things like recover. I didn't battle it, but I also didn't capitalize, maybe to the extent that I should have, just because I did have short on the brain. So
Mhm.
I'd say, on one hand, I did some things well because I didn't get into a battle with the tape, but on the other hand, I probably did not capitalize nearly as much as I should have, considering how strong of a rebound we've had since Monday. So a solid a solid C.
Okay. Yeah, honesty is the
Yeah.
best here. People they
Yeah,
want to
of
know the
course.
truth.
No, of
Yeah.
course.
Yeah.
I'd say last week, if we'd spoken on Friday of last week, I would have probably said about a B plus,
Okay.
a nice
Yeah.
solid B plus, but this week maybe not so great.
hmm So, just for the attendees that are here, I do want to let everyone know that the chat is open for questions for Dan. So, if you have any
Hmm.
specific questions you would like to ask Dan throughout this event, please put them there. I will ask him them for you, and we will have the discussion that you guys want to be hearing about and get the advice you want, etc., from Dan himself. So, again, the chat is open for any questions from our viewers. For now, though, I'll continue with my questions. We'll have a
Hmm.
conversation, and then we'll get
Yeah,
to those a little bit
sure.
later. All right, so we're March 15th. So we're halfway through the month of March, halfway through this
Hmm.
week as well. It's been a pretty crazy start to the month of March. We had, a pretty down February after a great January. What was your strategy heading into this month after February, and how has that changed or has it not changed with the recent action that we've seen on Wall Street?
Yeah. Well, actually, coming into the month of March, just knowing that we had such like a data deluge, I do tend to focus a lot more on like event trading.
Mm-hmm.
Um, so coming into March, like I knew it was going to be more of like the boom and bust style action, which really characterized a lot of last year. I mean, we had for stretches, starting in September, like these periods of market movement where it would be, like the CPI or the Fed day would trigger like a, tsunami of selling or buying, and then we'd have that kind of like the aftermath of that for like the next 2 to 3 weeks. So coming into March, knowing that the jobs report was taking on greater significance, and then the CPI, the PPI, even like the Fed day, which will be the FOMC rate decision next week, just knowing that after February and how strong January was, that March was going to be a lot more specific to these economic readings and different like market-wide catalysts. It was a lot, to me, it was a lot more like strategic, right? So instead
Mm-hmm.
of like being in like a ton of different names looking for continued momentum one way or the other, it was more like, okay, focus on getting positions, ahead of the jobs report or the CPI. And then, as it ended up playing out, I mean, a lot of that has now been overshadowed by what's going on with Silicon Valley Bank, right?
Mm-hmm.
So I mean, March, my game plan to begin with was always to be kind of strategic around these events, and I
Right.
feel like the action recently has only, you know, magnified the importance of doing that, just because we're in such like a highly volatile tape.
Yeah. So I do want to talk about that. The big story
Yeah,
that
of
we've
course.
been swirling around since the end of last
Hmm.
week is, of course, banks, particularly those small regional banks with the collapse of Silicon Valley Bank and then Signature Bank as well. We've seen a
Hmm.
lot of volatility in First Republic Bank, et cetera, et cetera. How have you been approaching that sector and the subsequent ripple effects across the broader market?
Yeah. So um, last week, it was, it was one of like those situations where it just, comes out quickly and then it just spirals out of control real fast.
Mm-hmm.
So I wasn't in Signature, I wasn't in Silicon Valley or Signature Bank,
Mm-hmm.
but I did trade some of the financials on Friday. So Charles Schwab was one of them. And basically coming into the week, I was just like, I'm gonna wait and see how this all plays out. I didn't have an opinion on any other financial in particular.
Mm-hmm.
And then because my trading strategy revolves a lot around options, like one of the nuances of options is that, as the stock drops and volatility expands,
Mm-hmm.
option pricing expands on both sides, really, right? So
Right.
puts get more expensive because there's demand, but also calls get a bit more expensive. So I was a little hesitant to start stepping into the hole, because I was looking at some of like the implied vol on regional banks, seeing like 500, 600, 700 implied vols. And like, even
Mm-hmm.
if we do get a bit of like a marginal bounce, is it gonna be enough to really make some money on some of these options? So I've been more like watching and kind of like getting a feel, seeing like which names seem to be holding in. Maybe they'll set up some better opportunities as like that option pricing starts to normalize a little bit.
Mm-hmm.
So that was one of the things I was looking at. But in terms of like the names, like the big like household names, like Silicon Valley came and went, and it was gone before I even had like time to like blink. And then I
Yeah.
mean, Signature Bank, some of the traders on the VTF had a fantastic trade on it. Unfortunately, I wasn't in that one, but
Mm-hmm.
was able to make a little bit of money on Charles Schwab on Friday, actually, on the downside.
Yeah. So all of this turmoil in the banking sector comes as we are in this really volatile inflation environment. The inflation is on the brain at all
Yeah,
times
of
for
course,
traders, for
of
the
course,
Fed, for normal people just at the grocery
everybody.
store.
Yeah,
It's a major focus for everyone, and the Fed's
egg
working.
prices.
They're trying to get it down.
Yeah.
So we got inflation data this week. Yesterday, the February CPI came in as expected, and then the PPI today fell unexpectedly on a
Mhm.
monthly basis. So those are rosy, uh, reports for the Fed in their fight against inflation. So, how are you currently feeling about the inflation picture and the Fed's response to inflation? And then expanding upon that with this whole banking. Well, okay, start with how you're feeling about inflation, and then we'll get to how the banking issues maybe impact
Yeah,
the Fed's
sure.
response.
Um, if so, some of the people listening, they might have heard me speak about this on the VTF, but I
Mm-hmm.
I guess the way I characterize it is that the Fed's really in a pickle,
Yeah.
because on one hand, before the Silicon Valley news, we were almost, I don't want to say it wasn't like we weren't in like the 95 percentile, but we were in like the high 70s percentage chance of a 50 basis point move
Mm-hmm.
next week at the meeting, right? Because a lot of the recent economic data had all been a bit hotter than what was expected and anticipated. And even just last week when Powell spoke, he kind of like left the door open for that 50 basis point move. So
Right.
um, coming into the week, I feel like people put the CPI and the PPI a bit on like the back burner, saying that like, how can the Fed possibly move at such an aggressive pace when banks are imploding? Um, you know, I would say that like the CPI, it obviously wasn't hot. I don't know if it was like cool enough to really say we're out of the woods when it comes to
Mm-hmm.
inflation. And the PPI definitely actually was a bit weaker today, which in theory like should be good. But I just I wonder if like the inflation fight is still going to be a long road ahead of us. People
Mm-hmm.
think that Silicon Valley and Signature Bank and all of the fallout is going to be disinflationary or deflationary.
Mm.
So that might help like the inflation go down.
Okay.
But in terms of just like the current readings, it seems like inflation's still kind of stubbornly high, and had this banking crisis not happened, we'd probably be staring at the 50 basis point move. I actually have like the Fed funds futures hike website up here that kind of like gives you an idea of what people are expecting.
Mm-hmm.
And we were just speaking about this before, but I think one of the more amazing things over the last few days is just how wildly the expectations have been swinging
Yeah.
in
It
terms
was
of
so fast
yeah.
that day on Friday, the
Oh,
change
it's
from
been in
50
yeah,
to 25 basis points. And now they say that now that the Fed futures targets show that
of
next week
course.
might be the
Yeah.
last rate hike of this year,
Yeah.
at least
Uh,
according to traders. I don't think so.
exactly. No, I don't think so either. But I mean, I think that just like highlights like how fluid of an environment we're in right now, where at one point last week, there was a 75% chance at 50 basis points. At,
Yeah.
at one point, I believe yesterday, I was looking at expectations, and there was a 70% chance of 25 basis points. And now this morning, when I checked, and it's since moved again, but at one point I checked this morning, and there was a 65% chance of a 25 basis point cut for next week. So just in the matter of like 3 to 4 trading sessions, we've gone from 75%, almost 50 basis point raise to almost a 25 basis point cut. So, I think what really, to take away from this, and, not even going off to like July and September and December, where people are pricing in 50 basis points or 100 basis points of cuts, is that the situation is so fluid that people don't
Mm-hmm.
really know what to expect. And I feel like the Fed themselves is now kind of in like a tough spot where, their mandate is to get inflation down, which, theoretically, a bank crisis should help to get inflation down, but how long is that going to take? And what do they do in the meantime when you still have, inflation readings in like the 6 or 5
Yeah.
category, right?
And
So it's a tough, yeah.
yeah, that's what I wanted to talk about more was um, the Fed is in this bad spot basically,
Yeah.
as they
Pickle.
have to get inflation down because
Yeah.
consumers need prices to be lower.
Yeah.
But they say
Hmm.
something always breaks, right, during a Fed
Yeah.
hiking cycle. And
Hmm.
this was possibly what broke during this Fed hiking cycle was the
Yeah,
banking sector.
definitely.
What is the impact to consumers if the Fed backs off their plan and inflation stays sticky, and we're looking at longer term inflation at 3.5% versus the Fed's 2% target?
See, I mean, that's such like a great question, because I feel like, people can have an opinion on what the Fed should be doing, and what
Mm-hmm.
what the Fed's impact may be, but there's so many moving pieces with like this puzzle right now that,
Mm-hmm.
if the Fed doesn't move and inflation does remain elevated for longer, does it become more ingrained? Because, I mean, right now, I think that's one of the concerns, is that inflation gets ingrained, and then it's going to be increasingly harder and harder to get down to like that 2% target they keep mentioning. So,
Right.
and consumers, I mean, as unfortunate of a situation as it is with like the bank and all of like the impact it's going to have with all of like the employees on Silicon Valley and Signature and et cetera.
Mm-hmm.
I mean, that, that still really isn't going to impact, you or I or everybody else listening that goes to the grocery store, that that
Right.
goes to get certain like goods and whatnot, and prices are still elevated. So
Hmm.
it's like I mean the Fed's really in the Fed's really in a tough spot, and I do not envy being in Jerome Powell's shoes at this point,
Mm-mm.
because I don't know what I would do. I mean, I'm not getting paid to do that, thankfully, but they're in a real pickle. I mean, I'm very interested to see how it all plays out.
Hmm. All right. So you did send me some charts ahead of time to just kind of
Mhm.
go over the current market environment.
Yeah,
So let's go through some of those. Tell me what you want to talk
sure.
about first, and we'll go
Yeah,
there.
let's start with let's pull up the chart of the Qs. So what you have up here is a chart of the Qs. So
Hmm.
what what was one of like the trades that began on Monday was, as money left like the financials, it started to move into tech, because
Hmm.
of the perceived nature of rates either pausing or starting to come down later this year. So big tech, um, which has like a disproportionately large impact on the Qs, helped have like this hammer reversal where the Qs open below the 200-day, which is the orange line, and the
Hmm.
290 level. Big quick move back into like this wedge pattern, and after like two strong follow through days, including today, the Qs are coming to like the top of this month and a half downtrend. Now, what I think is interesting is that, as you approach the top of this like resistance, do you get like the strong follow through? Do you get the break of like the wedge, and do you get like a continuation higher, right? Because I think one of the things that people were comfortable with coming to the year was like being long tech. First quarter earnings were a bit better than feared, and now you have like the move up to the top of like this wedge, and if it really starts to power through, so this would be something to watch over the next like 2 to 3 sessions. Like if it starts to power through, that could turn into like another like momentum trade where people really step in, things continue to go. Or does it fail and start to play some catch up lower with the S&P, which is something we're going to talk about, I think after this, is just the
Yeah, and
chart
I
of the
did figure
SPY.
out the audio issue with the. I can pull
Okay,
the chart up
yeah,
alongside you. So.
I'm used to repeating myself, so it's
Hmm.
no problem.
Okay. Do you want to move on to the S&P now?
Yeah, well, we'll talk about the S S&P. So
All
this
right.
is the
Let me
chart of
pull
the
that chart up.
SPY.
Yeah, I'll
Yeah.
pull up the SPY chart. Have to make it a little bigger for everyone here.
Hmm.
All right.
Yeah.
There you go.
Okay. So, um, I mean, when you compare the action on the Qs and the SPY, I mean, it's pretty obvious to see that the relative strength has been in the Nasdaq, and the relative, I mean, the IWM and the Russell is worse, but I mean, comparing the two, the tech is obviously stronger, S&P is obviously a bit weaker. I think one of the major developments this week on the SPY, and what's most interesting, is that you can see that the reaction to the financials has knocked the SPY back maybe below, or after today's move, maybe like right at that like year long downtrend. So after like a really strong start to the year, the SPY has since given back most of the gains. On a day-to-day basis might be up like 1% or whatnot, or 2%, but it's right at like this long term trend, and how it maneuvers the next few sessions is probably really going to set the tone for what comes next. Because if the SPY, which is also currently under the 200-day, if it struggles to really find some buyers and get some momentum going again and get like a decent bounce, it threatens to reset the downtrend. And action under the 200-day can be extremely volatile and or weak. So I think Q's tech has been a beneficiary of of the bank mania. And the SPY is at like a similarly interesting spot, although for like different reasons. Because right now I'd say like SPY is kind of at like a make or break area where it needs to firm up, or it threatens to reset the year long downtrend. And the longer it remains below the 200-day, probably the more sellers it brings out.
Okay. As we're going through these charts, everyone just think of any questions you might have. We'll get to questions after these charts with Dan. So
Yeah,
ask anything. We do have a few already in, but anyone who has questions, please put those in the chat. Do you
yeah.
want to go through the Tesla and the UUP chart as well?
Yeah, let's talk about the UP. It's one of
Okay.
like the interesting things. Um, so
All right, chart
um,
is up.
yeah, so I don't have any levels or lines marked up. I think what's like the important thing to really like take away from the dollar. So this is the UUP is the dollar index. It's like an ETF.
Hmm.
But the orange line I have up here is my 200 simple moving average. And after today's rally, it's getting back up to that 200-day moving average, which is for most people, it's like a really key level that they focus on
Hmm.
longer term charts. But what's interesting about the dollar, and I mean, because bonds have been extremely volatile the last few days, and I feel like sometimes the action in bonds can be a bit misleading because bonds can also be a bit of like a flight to safety trade.
Hmm.
Also, I did read that there was, a bit of like positioning that got thrown out of whack, where people were net short, and the spike created like people like having to cover. But what I think is interesting is that like the dollar to me is a little bit more of like a tell. So
Hmm.
when I see sharp moves in the dollar, it's kind of the point where I take notice, and I think as it starts to approach that 200-day, you really want to start to pay attention because for a portion of the end of last year, as the dollar was rolling over, it didn't correlate very well with like with tech versus at previous times in 2022 it was like the Qs and the UUP were perfectly inversely correlated. So when the dollar ticked up, tech ticked lower. When the dollar ticked lower, tech ticked up. It's
Yeah.
a tongue twister. But now you're starting to see that that correlate a bit again,
Hmm.
and or at least since like the beginning of February. So I feel like instead of like a lot of people focus on bonds, but I think that it might be more important to focus on the dollar right now because the correlation seems to be coming back into play. And as the dollar approaches the 200-day, which is a really significant level, it might kind of give you clues, which way like the cues or like the market in general could start to move because it has like that correlation that kind of broke at a different point towards the end of last year is now starting to come back, and dollar strength could weigh on tech while like the weakness could start to really help fuel momentum breakout of that wedge we were highlighting before.
Okay. Um, I did just get a weird 10-minute warning from Zoom that our meeting is going to end in 10 minutes. So for you and for everyone, we'll pause things, I'll restart our meeting. We'll keep going so we can make sure to get to people's
Yeah,
questions. So many technical issues today, but that is life.
that's
All right.
okay. That's
Do you
all
want to
right.
talk about the Tesla chart?
Yeah,
All
yeah.
right, let me
So
pull that one up.
yeah. So the Tesla actually it relates to um I kind of wanted to highlight Tesla as something that relates to one of the things that like my style looks for, or what I
Okay.
look for with like my style of trading. A lot of what I do is event driven.
Mm-hmm.
So I focus on, like economic events like we just spoke about. So like when it's CPI days or PPI, well, less so PPIs, but like CPI day, Fed days, whatnot. I like to know option wise what's priced in, what's expected, how that compares to previous events of like the same nature, right? Because
Mm-hmm.
I'm always trying to look for an edge when it comes to these things. Like, are options mispriced or are they overpriced, right? Is there room to make money buying straddles or strangles? Difficult to catch like a decent trade. So a lot of my focus does revolve around events, and I think one of the interesting things about Tesla, you can see, after like the last like couple weeks of selling, Tesla had like a big hammer on Monday underneath some moving averages and kind of close to like that mid 160s level, like
Mm-hmm.
I didn't think 164, 165, whatever it was. But it was kind of like an important area of support towards the end of last year. And it also was like a bit of like a quick pivot post earnings in January. And I think one of the interesting things about Tesla is that within like kind of like the large techie momentum names, it's actually the one with like the closest big catalyst on the horizon, which is the early April deliveries. So for me, like I've started to pay a lot more attention to it because
Mhm.
there have been on occasion over like the last year and a half, some really phenomenal moves on Tesla in the lead up to the delivery announcement,
Mhm.
because people start to get excited, everybody starts to talk about it, analysts start to come out with like their expectations, so it tends to get more interest. And granted, in October, it wasn't really in play, so it didn't get as much attention. But having had such a remarkable January and February, and now pulling back, I feel like this is something to pay attention to, especially if tech does start to turn the corner, people start to look for some of those momentum plays. Tesla to me seems like it could be in a bit of like a sweet spot where if things firm up, turn the corner, right? With the 15th of the month today, now we're starting to get into like that 2 week window. Excuse me, that 2 week window where expect people to start talking about Tesla again, expect analysts to start weighing in. And it's these types of things which I'm kind of like on like the hunt for,
Mhm.
where it's trying to get like a bit of positioning before the event, maybe try to like catch like a move, or capture a piece of the move before like the actual event. That way you can like adjust options, maybe you can maneuver the trade where make some money, then lock it in, reduce your risk, or maybe even get to the point where you can make enough money where you can cut your risk to zero, and then you're playing like the event for free. So I thought Tesla was kind of interesting, both as like a technical setup, but also as like an event setup. And now it's going to kind of come down to I guess how the overall market acts, and how like the next few days go on Tesla, because I mean it's not immune to like market wide selling, right? I mean things
Mhm.
things need to stabilize and continue to act well, I think, for Tesla to really turn the corner. But it does seem like a pretty interesting setup just over like the next 2 weeks into that. Usually it's the second day of the quarter, so my guess is like April 2nd, you're probably going to get deliveries out of Tesla.
Okay. All right. So, real quickly, we're going to take a quick pause. Let me stop our Zoom meeting and then
Yeah.
restart our Zoom meeting.
Okay.
Everyone, just hold tight. We will be right back to answer all of your questions. Okay, everyone, we are back. So, apologies for that little intermission there. Zoom is messing with me today. But okay, we do want to get to everyone's questions here. Specifically, we want to be talking about what you guys want to learn about. So our first question comes from John Dan, and this is specifically for you as a trader. What is your time frame?
It really varies.
Okay.
It I do a little bit of very short term time frame. So, I will scalp a bit during the day on different like news related headlines, like breaking intraday headlines. It's one of the things I like to do. But then I also will sit and I'll sit in positions for weeks, or sometimes even a couple months. I mean it really all depends. Like I do like having like kind of like a mix of shorter term stuff, as well as like longer term stuff where I can ideally, if everything works out well, it's like make a little cash flow on like the short term stuff and try to sit and really let like the longer term stuff develop, and or sometimes I'm sitting in positions for several weeks or a couple months waiting on a specific catalyst to play out.
Hmm.
So, it's more of like a waiting game where hopefully like on a day-to-day basis, I'm trying to like catch stuff on like, maybe like 5 minute, 10 minute, sometimes, like an hour long holds time
Right.
frame.
And that kind of, I think, answers the next question, which came from Aman. He asked if you are swing trading or day trading in this
Yeah.
kangaroo market.
Oof. I mean, I definitely think I think when volatility is as high as it is right now, that it lines up better for day trading.
Hmm.
Um, and that doesn't mean that there aren't maybe long-term opportunities that are currently being presented, right?
Hmm.
I mean, because I do wish I knew the financials more in depth than I do, because I'm sure that some of the with all of like the exaggerated moves to the downside, I'm sure some of these financials are going to be, probably like multi-year buys. I don't have like the knowledge of that space. And the problem is like, trading options or focusing so much on options, time frame matters, right? So,
Hmm.
I could, I could buy options like a month out hoping for a bounce, and then it takes 2 months to bounce and my options don't work. So um I guess what it comes down to is like, I think in this environment, like day trading is a bit better just because the volatility is a lot higher. And plus like having visibility for 2 to 3 or 4 days is a bit tougher.
Hmm.
Just things are developing so quick. But if there's something that especially in like the banks that have really been hit hard. I mean, if you know that space well and you really know the company, I mean, I feel like there could be some great opportunities for like, long-term like swing initiations. But me personally, it hasn't been a focus of mine in the past, and I just don't know the space as well.
I do want to talk a little bit more about options and your strategy there because, as we've advertised ahead of this event, Dan is an options specialist. So he specializes in options trading. So, since that is where your niche is, how do your strategies differ from a more traditional equities trader?
I mean, they are similar in a
Mm-hmm.
lot of regards.
Mm-hmm.
Like I'm still looking for like different types of like, technical setups. So like, buying it. So like for instance, like we talked about the cues before, right?
Mm-hmm.
On a resolution of that pattern, you know, uh, somebody who trades equities might just per I know outright purchase the cues and look for like a breakout, right? Or like a 2, 3, 4, 5, whatever type move. I mean, I'm looking at the same pattern, and I would still be bullish on a breakout as well. But instead of like purchasing like the underlying ETF, I'd purchase like calls or call spreads on it. So I
Okay.
do I do options that line up similar to like equities in that regard. But then I also, what we were speaking about just a little while ago, like I
Mm-hmm.
do a lot of event stuff, which I think is like really well tailored to options, because one of the great things about trading options is that you always know your risk, right? Your risk is
Right.
always defined. I mean, assuming that you're trading like long or like debit positions, right? So if you're selling premium, that's a different story, because then your risk profile is a little different. But
Right.
I mean, if you're exclusively buying contracts, spreads, et cetera, then your risk is defined. And when you're playing events, you can go after some of these things knowing that, okay, trade doesn't work. At the end of the day, like my max loss is, X amount, right? Versus like if you were to take equity into like an event, like an earnings report or the CPI, and it goes against you, I mean, your risk could be quite a bit more. So,
Right.
I do like, technical setups and different types of patterns like that, but also I think like options are particularly suited well for event trading. So I tend to do a lot of that type of trading as well, in addition to like the technical moves on a day-to-day basis.
Okay. Our next question is from Steven, and he wants to know a little bit about your personal journey with trading. So he said, can you talk a little bit about your trading journey when you first started? How did you handle your first few years balancing achieving consistent profitability with paying real life expenses? Was there a point that you reached in your journey where you felt comfortable taking on the responsibility of having a family, for example? And how did you know you had arrived at that point?
Hmm. So that's a great question.
Mm-hmm.
Um, so I started right out of college. So for me, I guess it was a bit of like a different learning environment.
Okay.
I didn't have as many responsibilities right
Mm-hmm.
away. I mean, I didn't have a family to support, and I I mean, the only person I was really responsible was for me, and I think it helped in the sense that I was able to trade a little bit more loose and really like learn like the basics of the job, knowing that at the end of the day, like if it doesn't work, I'll just go do something else. I didn't have to put like food on the table like this, like the attendee asked. So
Mm-hmm.
for me it was I think it helped starting at like a young age because like I was able to kind of like get that under my belt. And then as I continue to like trade and start to, because I didn't begin trading options right away either. It was mostly equities or
Mm-hmm.
almost exclusively equities at the beginning. um, so like as I started to trade, then I became more comfortable knowing that I'm making X amount per month, right? I mean, I would have highs, I would have lows, but I was making like like kind of like a steady, consistent amount, and then I started to take on more responsibilities. I mean, I didn't get married until 2017, so that was what, 6 years ago, 5 years ago. I should probably know this.
Six.
Yeah, six
Well, it
years
depends
ago.
when in the year, but yeah, 6 years this year.
Yeah, yeah. So I think what's important when you begin is just to kind of be 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 easy on yourself,
Mm-hmm.
right? Like, because there's definitely going to be like a learning curve. For some people it might be sooner, for some people it might be longer, but there's going to be a bit of a learning curve. I mean, it's like starting anything. I mean, you really want to like immerse yourself in trading and get the basics, or start to like listen to people that know what they're doing and try to get a feel for what works for you. So it could be, it could be a couple months or it could be longer. And I think like having like all of these, extra stresses in your life could
Mm-hmm.
make it like a bit more, like you have to perform. So if you can kind of like minimize like the outside stress, right, and just try to focus on learning the business, learning the trade, learning like money management and risk management, and spotting and like when to press it and when to like dial it back, I think it could really like help your journey as like a trader. Because it's unavoidable. Like this job has stresses just built into it. I mean, like
Yeah.
there's things you can control on a daily basis, and there's a lot of things you can't control. So in your personal life, I think if you can, and I mean, we're all different point in our career. I mean, or different part of our life. I mean, some are in their 20s, some are in their 60s, some are in their 80s, and everybody has like different responsibilities. But like if you can kind of like minimize or at least like get to a point where those aren't like your predominant thoughts on a daily basis, and you can just think about trading, I think it could put you in a better mindset where you can really like dig in and dive in and try to you know figure out what type of what type of strategy really suits you best. And for some people it might be, it might take like a couple of weeks or a couple of months, and some people might be longer. But just getting to that point in your life where you can really get to like the strategy that suits you the best.
Mm-hmm. Our next question comes from Eric, and he asked, when you enter a position, do you buy weekly options contracts or monthly? And do you buy in the money or out of the money contracts based on your price targets?
um I'll do both. So, it really depends. So again, I mean, like some positions, like I said, I hold for like weeks or months. So, I mean,
Mm-hmm.
obviously in those cases, like I wouldn't go with weeklies because it wouldn't
Right.
make sense.
Mm-hmm.
But for like day trading, yeah, I'll routinely go with weeklies. And sometimes they're at the money, sometimes they're further out of the money. I generally don't day trade in the money contracts, although I do know that there are plenty of people that do that. I mean, when it comes to news, I'm more of buy first, ask questions later.
Okay.
So the contracts that go with are tend to be kind of scattered around,
Hmm.
just because when a breaking headline crosses, option spreads can tend to be a bit wider. So like
Hmm.
I say they blow out. So I tend to go with like the contracts where the bid ask spread hasn't blown out. So when it comes to news, like it does tend to be all over the place. Sometimes the contracts are closer to the money, sometimes they're for other money. When it comes to like technicals, yeah, I do like buying contracts around like the target level. So if I was targeting like a move just on a hypothetical stock where it was trading at 295 and I thought the stock could get to like 300, I might actually look at like buying calls like at that 300 zone,
Hmm.
thinking, that's like my target. I'm looking at options there. So
Okay.
yeah, it's a funny question because I've gotten asked that in the past, and I do end up buying like a lot of contracts that are at or around my target zone, just because like that in my mind, I'm like, okay, I think you can get there. That's like a good target to go after.
Okay. Our next question from Franklin is more about a T3 trading group and how it works being a trader with T3 versus your personal trading. So he asked, do you trade a lot of vertical spreads at T3? Do you sell credit spreads on indices or ETFs that track the indices?
Yeah, so I do vertical spreads. I do vertical, I do horizontal. I do a lot of different option strategies.
Hmm.
Um, I don't often sell premium. Just I don't like credit. Um,
Okay.
I tend to focus more on debit strategies.
Hmm.
So I don't often. I mean, I will on occasion, but I don't often do that. But I feel like you know it's one of those situations that if it's like a risk you're comfortable with, and and you have familiarity with what you're doing. I would say that if you're starting out as like an option trader, it's probably best to kind of get a feel for options trading before you jump into to credit the credit side of it, because
Hmm.
selling premium does present different issues than buying premium, just in that like your risk profile is a bit different. So I think for those starting out, try to get a handle on like the debit side of it, right? Like the long only side. And then once you kind of have a feel for that, then you can start looking at selling premium, just because there are differences. And what I think is like difficult for some people to understand is that like, just because like a stock might not get to like the level that they're selling premium at, it doesn't mean that they can't lose money on those options. So
Hmm.
I think it's one of those things where people need to have some familiarity with it before they get into it. But as far as me, yeah, I trade verticals, horizontals, all sorts of different strategies. I don't often sell premium on the ETFs, but
Hmm.
if the mood strikes me, I may.
Okay, just for everyone watching, just remember if you have any questions for Dan, submit them now. We have about 15 minutes left, so we'll get to all the questions before we wrap up. So anyone who has any, just go ahead and put them in. We still have more. But Eddie asked, for you as an options trader, without getting overly specific in regards to Gamma, Vega, etc., how different are your options positions versus a normal stock position?
How different? So you mean how different are they in terms of how different in
That's all I
terms of
have.
yeah.
Yeah.
Um, so I mean I'm not sure I necessarily get the nature of the question, but I'm not typically going with I'm not typically going with high delta. So that'd be like deeper in the money
Hmm.
contracts, which would mirror more like the underlying stock.
Okay.
So when it comes to like option trading for me, like like the targets are more like I'm looking more for like buying contracts that are like 50 cents, a dollar, $2, and selling them for 25%, 50%, 100% gain potentially, right?
Right.
Versus like for a stock. you might be like buying it and like selling it for like, a quarter, 50 cents or a dollar or what have you. But
Mm-hmm.
like generally, I'm not going with with deep in the money high delta contracts. These are options that are at the money or are out of the money. And I'm looking at them more from like the perspective of, again, I mean, like 50 cent, dollar, $2, whatever it is, and then just catching like the 25% move, 50% move, and just piecing out, and then just booking it like that. So I'm
Okay.
not sure if that answered the question specifically.
I,
I was trying to get a feel for what they were looking for there.
Eddie, if you are still here, just clarify if he answered or
Yeah,
not in the chat.
yeah. I
Our
mean,
next,
I
mhm.
oh, sorry.
No, keep
Yeah, so
going.
what I was just gonna say is, you know, I I I think that like a lot of the option Greeks are very useful. So
Hmm.
if you're going to start trading, it's really, I think it's important to have like a fundamental knowledge of like the option Greeks. So like like gamma, delta, vega, theta, whatnot. Um,
Hmm.
but on a day to day like trading basis, you might find yourself not using them as often. Um,
Hmm.
so I think it's easy to kind of like overcomplicate things and in terms of like technical or like fundamental like option theory, talking about like all of like the Greeks. But I do think that just talking to like other traders that focus on options, I feel like delta, theta, gamma gets a lot of attention because of like the option dynamics in the market. So I feel like option gamma, it gets talked about a lot, but for a lot of traders, they may not focus on it exclusively on a day-to-day basis.
Hmm.
So, while it's good to like know the basics of options, I will say that intraday when I'm like playing new stuff and breakouts, the Greeks don't factor in as much to me, on that like smaller time frame.
Okay. Eddie says yes, you answered his question.
Okay,
So
cool.
good job. Okay, our next
Yeah.
question comes from another Eddie, but a different one. He says, "What is your opinion on dealing with different term structures on the index options in the current market condition, where contango structure formed up near term, up towards the upcoming Fed FOMC, while backwardation is still on the further tenure contracts?" Does that question make sense? Let's go
Yeah,
through it again. What is your opinion on
yeah.
dealing with different term structures on the index options in the current market condition?
Like you may have stumped me here. Yeah, you may have gone
He
a little
also
bit too.
asked how you deal with the volatility skewness.
Yeah, well, so um, I think that's we spoke just briefly about it earlier, but
Mm-hmm.
I think I think one of like one of like the more misunderstood things when volatility like spikes, especially like it has on the financials, is that you know option pricing spikes both on the puts because the stocks are collapsing and there's demand for puts, but also option pricing spikes on the calls as well.
Mm-hmm.
So, you do get like this like really exaggerated, implied volatility movements. And it can create some like ridiculous like skew charts. Like I think this is kind of along the lines of what he's
Mm-hmm.
asking. So um, I was reading today, and I think it was kind of interesting. But some people have started to talk about doing like horizontals or like calendars, saying that because like the implied vol environment is so elevated right now that it might be advantageous to start selling like short-term premium and then look out a few weeks or even like out through April, because on a relative basis it's like, yeah, you're paying for that extra time value, but compared to like the really super inflated short-term option pricing, I mean, on a relative basis, it's better to go out a few weeks or a month, because the pricing is going to be a bit better. So I know I haven't thrown on anything yet along those lines. Again, I mean, just like I think one of like the areas that's maybe suited best for that right now would be financials. So I do personally have to do a little bit more work and kind of get a feel for which of these banks is still at risk, and maybe which ones seem to be due for a bounce or could be due for a bounce.
Hmm.
But once I do go out, start looking at those, that might be something to look at, where with implied vol on some of these. I think I was looking at FRC on Tuesday, yesterday, or Monday, and it was like literally, I think, like a 700 implied vol, which is it's crazy. Like, you don't see that on a regional bank. But then, looking out through April, yes, option pricing is also elevated, but not to the same degree. So it might set up some good opportunities where you can be selling short term, buying like, slightly out 2, 3, 4 weeks, a month.
Hmm.
And then if you do get an extended bounce, you kind of like using short term premium to finance longer term premium.
Hmm. Okay, we do have a few more questions. So this is our kind of a last call for anyone who has a question to ask. Go ahead and submit that now before we wrap things up here. Our next question is about quant trading. So what are your views on quant trading? Do you use machine learning or other quant-based strategies like statistical arbitrage in day trading?
Do Well, I don't personally use those, so I
Hmm.
don't know if that was the end of the question. So
That was
I
it.
don't
Yeah.
I don't I don't personally use those in day trading, but um I feel like I mean, we've already ventured down that path. I mean, I feel like trading has moved in that direction for a while now. And um it seems like there's always going to be professionals like us that are traders, but you're also going to have like a large contingency of like, the quant trading. So the algorithms, the CTAs, where people just set their strategy, they program it in, and then they let it go to work. So
Hmm.
um I mean, as far as like AI, I'm curious to see how that ends up playing into it, because
Hmm.
I mean, I think one of the things that's interesting is that it's supposed to be like, like dynamic. Like, it kind of like Chat GPT is supposed to kind of like learn on the fly, incorporate like all of this knowledge. So,
Hmm.
you know like, does that create, it's weird, because like they say at any given time, like a stock is supposed to be appropriately priced, right? Like, like that's like the whole like theory behind stocks, is that they're always supposed to be appropriately priced. So if like a AI is supposed to have an like upper hand, it's going to be interesting to see, like, can they move things before can they move things before people like realize it? Like, I don't know. It's like, you set my mind whirling about like this whole AI thing, and I'm still trying to like get my head around like how it's going to like factor into like trading, because I mean,
Hmm.
other than like, doing like a chat bot, I mean, I feel like we're just at like the tip of like the iceberg in terms of like its implications. So I
Yeah.
mean, it's a good question, but I really have no idea how AI is going to factor into it. But I mean, I think we're at an age where, I mean, algorithm trading is part of like the structure of the market, and I mean, I think it's going to be around for a long time.
Yeah. All right. And then Eric asked, speaking of gains in stocks, if your risk is 50 cents, one would sell half of their position when that 50 cents risk has been covered. Do you have a similar strategy for options to cover the risk?
Yeah. Hmm. Yeah. So that's what I like to do is um on like newsy type plays, or just like in general. What I like to do is kind of like piecemeal out, like generally around like those percentage like break points. So, if I could sell some at like 50% and then sell some at 100%, then basically I'm like removing my risk from the trade. And then it starts to get to a level where it's like, to me, it's almost like, I don't want to say like free money, because there's obviously a little bit of risk. But if you're able to like, buy a block of options, sell half for 100% gain, then realistically, like, that other half is if they go to
House
zero,
money.
then
Yeah.
you're still going to be walking with the trade with, like, you're not going to be losing money. So
Hmm.
I approach options from that perspective. It's like, if I can, or if I bought calls and the stock moves in my favor, and I could sell further out of the money calls for the exact same price, then basically I removed my risk from the trade. And if it keeps working, then I should make some money. And if it doesn't work, then at the end of the day, the most I'm losing is nothing, right? Because I already
Hmm.
removed my risk from the trade. So yeah, I do often do that. where, I can sell a piece, or I can kind of structure it where I can like take my risk out and then kind of like ride with like house money.
Mm. All right, so our final two questions here are from me, and I want to hear about just so tell me about the worst trade you've had this week and what made it the worst.
Well, I mean, going back to the cues and maybe a bit of my stubbornness. I think one of the things that I had on my watch list coming into the week was I thought, after such like a tumultuous end of the week, um, and especially with Signature Bank announcing on Sunday night that they were unexpectedly shutting down, I was
Mm-hmm.
like, okay, it's going to be a volatile start to the week. So when we saw like the quick bounce on the cues from down, forgot what, like maybe like 1% to like back up into that 290 level, which I highlighted,
Mm-hmm.
and the 200 day, I was like, okay, perfect spot. It's probably an area where we stall, maybe chop around and then end up trading lower later in the day. But we ended up blowing through that and continuing higher. And unfortunately, I was on like the wrong end of that because we didn't stop, we kept going, and even though my options haven't expired, they've still lost money. So for me, like that was probably like the worst trade of the week, was just looking for like that quick bounce to stall and turn lower. Instead, it bounced and kept bouncing and bouncing and bouncing and bouncing.
Okay, we do have one more question from Steven. This is a good one. He said, as an active trader, what is a realistic annual percent return target? He's heard guys talk about 50 to 100%. In your experience, is that a realistic target?
I mean, it's going to depend on your strategy, and it's
Mm-hmm.
also going to depend. It's going to depend on the overall market environment too. I mean, you can have like a target, right? Well, I guess what's going to be realistic is how, like how you go about achieving that, right? So some people prefer to trade less and just look for like, like their sweet spot trades. So they trade less, and when their trades come around, they try to hit it hard, and maybe, you know, they have like a few good trades a year, and that really moves the needle. But if you don't have a
Mm-hmm.
few good trades, then you don't end up making as much. Or there's more active people that just look for like, grind it out, make like a few hundred, a few $1,000s a day, and just add up, add up, add up, add up. So I think it kind of depends on your style. If you're more of like a grind it out, could be more consistent. If you're more of like a, shoot for like a home run trade every like 2 months, every 3 months, then it's really going to depend upon whether you hit that or not, right? And also, if you're more of like a bull mindset and it's a weak tape, it's going to be tougher versus, if you think bear and it's a raging bull market, it's also going to be tougher. So I think one of the things is like having like a target is good. And what I've told people in the past that have asked this question is, I think so using like, say, your P&L from like the last 3 months, right? And like average that out, and then
Mm-hmm.
then use that as like a target goal for like a month, or take your P&L for say like the last month, and go and look at like the top 3 sessions, average that out and say like, that's what I want to target as like a daily goal, right? So like having like goals like that, which are based off of things that you've actually achieved, could be more helpful versus just saying like, I want to make like 50%. I want to make like 100% return. I think like, using goals that are specific to like stuff you've actually accomplished might help. And then as you progress and get better, that monthly average, or that weekly average should keep ticking higher. And then your goals should be more suited to you, and not just like some arbitrary number you hear people talk about on Twitter.
Okay. And then our final question here is tell me about the best trade you've had this week and what made it a good trade. We know good trades aren't just because you made money. They're usually because
Yeah,
your strategy went well and the trade went according to plan.
sure.
So tell
Yeah.
me about it.
So I mean, I guess it'd also be Tesla, even if like the options haven't started to move as much as I would have liked.
Mm-hmm.
It's just because I and this was again, if we had had this conversation last week, it would be a totally different story. But
Hmm.
like when Tesla was dropping last week, I did have some put options on it. So when it dropped, and I was waiting for a specific move, played out perfectly, and then when it hit the downside level I was looking at, I ended up open up some call spreads on the way higher. So I feel like one of the best things I did this week was also kind of like tied into stuff I did last week, where I was waiting for the reversal, kind of thinking about, two weeks out, 2.5 weeks out, that deliveries could be coming, looking at Tesla at a big level. So dropped last week, was able to like flip, open some options on the upside, and now I'm looking to see if Tesla can string some days together and really start to like make a run as we get closer to that delivery date.
All right. So for everyone currently watching, I'm posting a link in the chat for our next live event. So I will be live again in 2 weeks with Derek Olden-Smith, senior trader at T3 Trading Group. He's already joined us here on Conversations with a Pro Trader a few weeks ago. And starting with that event with Derek, this will be an every week event instead of every other week. So starting March 29th, we'll be having conversations with pro trade. I will be having conversations with pro traders every single week. So it'll be Derek, Pat, Scott again, and Dan will also be joining me again in the future. So as this market environment changes, we will be checking in with our pro traders once a week, every single week. Yeah, Derek. Thank you so much, Dan, for joining us today. This was a great
Yeah.
conversation, even with all of our
Yeah.
little technical issues that we
Yeah,
had.
that's okay. That's all
It's all
right.
real life, guys, but thank
I
you for
mean,
being
come on,
patient with me.
Kathy Wood had the Zoom call fail on her, and she's Kathy
There you
Wood,
go.
so
Exactly.
yeah.
So thank you everyone for joining us today. Again, sign up for the next live event in 2 weeks with Derek. We'll see you there. And if you are interested in working with Dan more, again, he is a professional trader at T3 Trading Group. And then he is also a moderator in the Alpha Team virtual trading floor alongside Scott Redler with T3 Live. So you have a few opportunities to work with him as well. And we'll see him back here in a little over a month. Thanks so much for joining us, Dan.
Have a great night.